Not only do we have home prices rising rapidly, but now we have interest rates rising as well. Interest rates are rising and rising fast. They are rapidly approaching 6%. New Federal Reserve projections show 6 rate hikes this year alone. When the Federal Reserve makes it more expensive for banks to borrow, the banks in turn pass on their higher costs to their customers. Interest rates on consumer borrowing, which includes mortgage rates, then tend to go up. You are probably asking yourself, can I afford a home right now? The short answer is yes. I know that many people are freaking out with the higher interest rates. Many are thinking that their payments are going to increase by thousands of dollars. The reality is that they are not. I'm going to discuss this in detail for you today using a mortgage calculator. I'll compare for you the mortgage payment from January and the mortgage payment that you will be paying now. I'll give you some ideas of what you should do during this volatile real estate market. If you're one of those buyers who has been struggling to buy a house, lost countless bidding wars, or you're thinking that a recession is coming and home prices are going to come crashing down, this video is for you. For a while, only home prices were increasing, but now interest rates are on the rise. As of May 12th, Freddie Mac has the 30-year fixed rate mortgage rate at 5.3%. I know it sucks. I'm sorry, especially for those of you who have been trying to get a house. I just want to ease concerns. I want to show you what your monthly payment will look like now versus what it would have looked like back in January. I'm not going to go back a year because those rates were below 3%, and I think people would get depressed with those figures. At the beginning of January, the interest rate was 3.22%. If you pull up any online mortgage calculator, this will give you an estimate of what your payment will be. According to Redfin, the median sale price in San Antonio for April 2022 is $295,000. I rounded up to $300,000 to keep the math simple. Now, if we put a down payment of 20%, it's $60,000. Let's put a length of your loan to 30 years. Let's put the interest rate at 5.3%. That's the interest rate as of May 12th. So your principal and interest will be $1,332. According to an online property tax calculator, property tax for a Bexar County home worth $300,000 is $5,970 annually. This comes out to $498 a month. According to insurance.com, the average rate for a $300,000 home in Texas is $2,300 per year. Therefore, your homeowner's insurance is $192 a month. Your monthly payment right now on a $300,000 home would be $2,022. Now let's compare to January of 2022. January of 2022 interest rates were 3.22%. Let's look at what the difference is. Back in January, your monthly payment would have been $1,730. Comparing January to May, monthly payments have risen $292 a month. Spreading that over 1 year, you're looking at $3,504 a year. It's not that bad. For some people, that could be a lot of money. According to mymortgageinsider.com, a 1% rate increase will decrease your buying power by 11%. So if you were looking for a home that was $300,000 and the interest rate went up by 1%, you're going to have to drop your price point by $33,000. Now you will have to look at a home price at $267,000. I've talked to many lenders and they're all saying the same thing. They say that the prices are going to continue to rise no matter what. If you're thinking the recession's coming and the prices are going to come crashing down, it's not going to happen. I could see that happening if we were to have a big economic fallout like we did in 2008. But unless that happens, you're going to continue to see a rise. I think that the prices will continue to rise like we've seen them for the past 2 years. According to Redfin, home prices in San Antonio have risen more than 20% in the last year. What does this mean for the average consumer? You have rising interest rates and rising prices. Should you be buying right now? Yes, you should. I would still consider purchasing a home right now, even if the rates are just above 5%. Even if they go up to 6%, the home prices are going to continue to go up, but interest rates are going to come down when we come into a recession. I say when because we are long overdue for a recession. What happens in a recession is that the mortgage rates will continue to come back down. That's when you're going to have the opportunity to refinance. You'll refinance, and at that time, bring those mortgage payments down. So that's how you're going to have to play this market right now. If you need to buy a home and you're just freaking out over those interest rates, just know that eventually you can refinance. The rates will come down, but your home prices will not. Just go in with that mindset because people are bogged down with the interest rates. Another thing you can do if you're forced to sit out and wait due to personal reasons, try to save as much money as you can. That way you can put more down on that house. The more money you put down, the less you're going to have to finance, and that will lower your mortgage payment. I know the market is tough. I'm working with a lot of buyers right now, and we keep getting outbid, and there's very little inventory in some areas. Buying a house is harder than before, but it's not impossible. Just know that even though the interest rates are high right now, you can always refinance in the future. The rates aren't going to stay high forever. The prices, however, will continue to go up. So don't be sitting on the sidelines waiting for those prices to come down. Because I hate to tell you, it's not happening anytime soon. I hope you find this information helpful. If you have any comments or concerns, just drop them down below. I love to hear from you guys. If you have any questions, feel free to reach out to me. All my contact information is down in that description box. Thank you so much for watching. I'm Jerry Esparza with Rider Realty, and I will see you next time.